All right, everybody, well, if you've ever wondered whether these prop firms are the biggest scam on earth or the biggest opportunity in modern trading, you're going to want to hear this one. Today, I'm sitting down with Rod Casilli from Traders Dev Group. And Rod's not some I started trading last Tuesday guy. He started at Merrill Lynch in 1992. He has traded through earthquakes, scandals, the wild west of old school markets, and he was one of the early traders of the E-mini back in 1997. But here's why this episode matters. Rod breaks down a real framework for how people are using micros and prop programs to learn the trading business without torching their life savings. And he explains a truth nobody tells you. For example, the difference between the $50,000 prop account they advertise and the real risk, the real drawdown, the real game you're actually playing. Then we get into his stay-in-your-lane approach, mean reversion, VWAP bands, overnight range, and how to think more like a risk manager than a get-rich-quick gambler. So if you're tired of hype, tired of magic indicators, and you want to hear a guy who talks straight about what's real and what's nonsense, you're going to love this. Here is my conversation with Rod Casilli. All right, everybody, I am here with Rod Casilli from Traders Dev Group. Rod, thank you so much for being here today. Appreciate it, man.
Thank you for having me, Eddie. Happy Friday and happy holidays to you.
Yeah, same to you, my friend. So before we get into what you're doing, your trading strategies, I'm really curious about your trading strategies, the way you look at the markets. I really want to know about you, kind of how you got into trading, how you discovered trading, what your journey has been.
Sure. So I'm kind of a lifer. So we don't like to talk. Well, we're dudes. We can talk about age a little bit. So I'm double nickel, 55. So I've been at this for a long time.
I got 2 years on you.
You got 2
year
years.
and a half.
We look pretty good, huh? My lighting's a little washed out here. My eyes are a little red. Anyhow,
little less hair
yeah,
than I used to have.
You wear it well, man. That's a cool look.
Thank you.
I think
it's really it's a comb over. I'm just combing over the bald spot up here.
Has that ever been pink or green or anything? Have you ever rocked it like that?
No. I mean, back in the day, I had the schlong, we used to call it, short and long.
I think that's
cut out.
Mullet, isn't that called a mullet?
Which is in style. Yeah, it's called a mullet. It's in style now. I had little blonde streak in it.
I love it.
We're talking.
All right. Well, there was a question in there, right? Where did I get started with this whole thing?
Yeah, sorry.
Yeah.
We're already off topic.
I really started right at Merrill Lynch as a young guy, right out of school, pretty much. And I was told, hey, you can't, Merrill Lynch, no, you have to have prior sales experience and this, that, and the other. And I said, nah, I got the gift for gab. I'm going to go in there and prove that they should. And they were reluctant, but that's how I started. So I started at Merrill Lynch in 1992-ish in there.
What office?
I was in both the Santa Monica, Beverly Hills office and then the Westwood office, mostly in the Westwood office, which is
wow.
Yeah.
I mean, I would imagine that's a great opportunity being in LA. Merrill Lynch. Did they take duct tape and tape the phone to your head? Because that's what they did to me.
Pretty much. There's a lot of cold calling. You know what was wild about it was that shortly thereafter, a couple years in, like in '94, there was a huge earthquake in LA, and it made it very uncomfortable to be in those buildings because there was aftershocks, whatever. So that was my indoctrination. I think that was like in January of '94, somewhere in there, January, February, and then also shortly thereafter. I went to Merrill Lynch because that was the firm I knew. I mean, back then there was still everything, right? There was Lehman, there was Shearson, there was Payne Weber, there was all those firms, Dean Witter. But Merrill seemed to have the best reputation. But shortly thereafter, we were dragged through the mud in the news where the controller of Orange County got involved on the wrong side of some bonds. This guy Citron, he was the controller of Orange County and got himself in real trouble and said that Merrill Lynch sold him these toxic bonds and was our fault. So as I was cold calling, they were like, oh, Merrill Lynch, you're the people that sell those toxic bonds. Anyway, that's where I started way back then. And I've been involved in one way or another in fintech or trading really my entire career. But this last go around, since essentially right after the financial crisis, I sold some businesses, got out of fintech and software, and have been looking at the screens and using it as my primary source of income ever since.
Wow. Okay. So how long were you a broker? I assume you were 763 licensed?
Correct. So I did it from 92, 93 to 97, just in time for the Asian currency crisis to happen,
Right.
and right around the time that
The
they
Asian contagion.
yes, and right around the time that they launched the you and I have been around long enough to remember before there was even an E-mini, let alone a micro. There used to only be the big
Yep.
contract. So in September of 1997, the CME launched the E-mini, and I was one of the first persons to trade that. So I was a broker for about 5 years. They called us financial consultants, but back then we were really
Yeah.
just
Right.
trying to sell stocks, and only gross mattered.
Stockbrokers. Yep.
Yeah,
Yep. Only gross matters. And every month you start at zero. That
that's right.
pressure of zero.
And I'm in an
Yep.
office with all these.
I did it for 17 years, so
Oh wow,
and I started around the same time. So I know the business very, very well.
which firm were you at?
Uh, I was with a number of firms, including Gruntle and Company,
Okay.
Joseph Thal, and Janney Montgomery Scott here in South Florida.
Oh, gotcha. Okay.
But yeah, all the way through. I was pretty fortunate, just very quickly. I'm a computer guy, so
Right.
when I started in the business, I just cold called people and recommended Microsoft and Intel.
Here you go.
And so, would you buy one share? Do you like the story? Will you buy one share? Yeah, I'd buy a share. Well, you'd buy 100 shares. So I'd open them up on 100 shares of this one of those stocks. Comcast was a big one I recommended a lot too. And they worked. And so then these firms I was at did like IPOs and gradually put them into other stuff. And I was just in the right place at the right time, recommending computer stocks and internet stocks and the business. I was just very, very fortunate
Yeah. When
to
we
be
started,
and I hung on for a long time. Go ahead.
we started when it was eighths and quarters, right, and teenies, right,
Right? Yep.
and
And halves
yeah, and halves,
and
and
halves
options
sometimes
just
too.
expired every month, not like every week or every day or every 3 days. I mean, just a completely different time. I actually had a brief stint where I left Merrill Lynch and I was a SOS trader. I don't know if you ever got into that. That's the small order
Yeah,
execution system.
the
Yes.
SOS bandits.
I ran the office of block trading in Beverly Hills, and that was kind of the real beginning of retail day trading. And yeah, we were just trading the dome in Dell and Microsoft were some of our biggest tickers, right? And
So that was right after Merrill, like 98, 99.
97, 98. Yep, that's what I did.
That's when
It
that
was
all
huge. I
it
went
was
to
huge.
Scottsdale and met the guys that kind of started the whole thing. And speaking of, that was the beginning really of these more high-powered computers and software that I had never seen before. Again, we're scalping the dome, right? And we're competing against the Goldman Sachs and all the market makers of the world. It was really fascinating time. Yeah.
It was, and the spreads were a lot bigger,
Yeah.
and a lot of the SOS bandits made a lot of money
We
for a while.
we made a lot of money. We generated a lot of commissions because again, it was thousand shares and it's eighths, so it's $125
Right.
every tick. Yeah.
Every tick.
Yeah.
Exactly.
hmm
Exactly. So, how were you making commissions? Just out of curiosity, were you trading other people's money, or
No, so
were
what
you
we
capturing spread?
so there was a commission just that was generated by the clearing firm was called JB Oxford. So it was basically
Yeah.
rakeback, right? Before rakeback was really a thing. So the commissions were being generated by the brokers, but then we got rakeback. So we got a percentage of our commissions back. And then I was in the funding game way, 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 way back then. So I left with Merrill Lynch with a very, very large client. I told him about the business model. He put a bunch of money into an account, and then we used that to leverage the day trading margin, if you will, for the SOS traders. At one point, we had
Ah.
$500, and if you 500 traders using our funds, and if you can imagine,
Oh, wow.
the kind of vig that you do on that on a daily basis when the interest rate's about 40% annually, it's a pretty nice vig. So
Wow.
yeah,
Wow. So you were running that? You were running 500 traders?
I
Or
was
you were just
funding
one of the
500
traders?
traders. I wasn't running it, but yeah. hmm
Okay.
Yeah.
So you had the big client, and you were the funding company for these
Essentially, back
guys.
before now we're in this whole new world
Wow.
of
Was
sort
it
of
considered prop trading?
It wasn't
It
thought
was,
of
it
prop
was
trading at the time. No, not necessarily,
okay.
because we were just providing them the margin. We had no percentage of their losses or gains. So, um,
Okay.
yeah. They, in other words,
Interesting.
so it's a form of prop, yes, because they had to have initial capital, right? And then we just provided the additional margin to, because, with 25 or $50,000, it's hard to buy 1,000 shares of a. Remember, Dell was trading what, 200, 190, and Microsoft. These were
Yeah.
expensive
Yeah.
stocks back then. Yeah.
Yeah. Well, seems like now they're a lot more expensive.
hmm
Most of it, not Dell specifically, but Microsoft. They don't split them as often as they used to.
When I, when I went
Uh,
to do training at Merrill Lynch in like late 91, 92, back in Princeton, New Jersey, we got to go down to the New York Stock Exchange, and they were talking about how to, every day on this New York Stock Exchange, $100 billion of notional value trades. 100 billion, dude. You can get one Nasdaq stock on earnings to add or subtract $200 billion of market cap in 5 minutes as soon as the earnings. It's astounding that we're talking about trillion-dollar
and
companies.
if you want to go back, 100 years. If the volume was 100,000 shares on the whole market,
Right.
that was a huge. I
Yeah.
mean, it's grown exponentially.
Yep.
It's absolutely unbelievable.
Yep.
So then you got into E-mini futures.
Right. So I have quite a story with futures because I was very early on, and uh, guess which accounts I opened in 97, 98. Can you pick the two firms that I had accounts with? I'll give you a hint. One was
Uh,
called PFG Best, and the other was called
okay,
MF Global. So the two
big firm.
well, the PFG Best turned out to be one of the biggest Ponzi schemes in the history of futures.
Ah,
Yeah,
and the other one
those were the guys
went
out of
belly up,
Iowa
right?
or whatever who he was cooking the books and faking all the statements for 10 years. And then MF
Oh,
Global was using customer funds to cover margins for their proprietary trading operation. So they literally
oh
just were
my God.
siphoning money out of customer funds. So yeah, those are.
Hmm.
It's funny. Those were.
Exactly like Sam Bankman-Fried was doing.
Yes,
Very
it
similar.
was very similar. So, but I cut my teeth on that and learned early on that I preferred to just look at a couple tickers and get very familiar with one thing. I had some buddies that had gone actually here to Vegas, where I'm at right now, and started with a firm called Bright Trading, which is still in existence. That's true prop from a retail prop perspective. And the guys at Bright would just trade one or two New York tickers. That's all they did. So I love this concept of
Wow.
specialization, because when
Okay.
you're in the broker business, you're talking about a different ticker every day. Sometimes it sounds like you were focused in computers, but I just didn't like the idea of having to look at research and, oh, today we're talking about this retail stock and now we're talking about this stock. So I was always drawn
Right.
to the simplicity of just looking at one ticker. So yeah, started trading the E-mini in 97, never looked back.
Now, how did you do that? Were you trading electronically, or were you actually calling down to the floor to run
No, it
trades
was
into
fully
the pit?
electronic by that point. You had,
Okay, okay,
you
okay.
mean you even had TradeStation back then still offering that product. So there was,
In '97.
yeah, uh-huh.
Oh, wow, I didn't know that. I
Yeah,
didn't know
they had
that.
just launched earlier in
That's
Florida, and
very early
they
on.
were offering it. Um, there was a number of other places that, interestingly, the wirehouses like where we come from, you couldn't do that there. No, you really couldn't.
In '97, I was still writing a ticket by
Oh,
hand
you
and
were?
bringing it up
Oh,
to a window at Joseph Thal.
mm-mm.
Yeah, we weren't even sending the orders. When I went to Janney, that's when I was able to enter them from my desk.
Oh,
It
no.
was, with, like paper with the duplicates connect. I mean, all the way through '99.
Oh,
It's
wow.
I was still handwriting. I know.
Merrill was way ahead of you because we had terminals in 94, 95 that I mean they were archaic and
Right,
nothing like
right.
what
Green
a
screen.
yeah, nothing like what a Bloomberg terminal looks like now. But I was trading OEX options in electronically in 95.
Oh, wow.
Yeah.
Oh,
Mhm.
that's cool. That's cool.
Yeah.
All right. So, you've been doing S&P Mini since?
Ever since until like 2019 when these micros came out and I started shifting from the minis to the micros, not because my own capital required that, but because I finally saw started a relationship with T3 Funding, which is in T3, which is
Sure.
a prop and clearing firm, and they didn't really have much prop stuff going. I mean, much futures education going on. So I had a brief stint there, and I came back into that business of education because I found, oh, well, these are smaller products. Now I can actually show people how to trade a smaller product in a risk-adjusted manner that just wasn't possible with the e-minis. I had trading education businesses for 10 years prior to that, and just a lot of people struggled because it was their own money, and it was just a bigger product.
Mm. Oh, okay. So let's talk about that. So you're you're uh you're trading the S&P 500 minis and the micros. That's pretty much your specialty. Or what other markets are you looking at now? What are your main
So I
markets?
have two worlds really. So I have a education arm called TDG, the Traders Dev Group, where over the last 5 years we've really I've morphed it from general trading for intraday futures trading across a variety of different products and instruments to very laser focused on the business opportunity that's available from sim farming or stitching together a lot of these prop programs for a while. And in that, we just trade micros, mostly the MYM and the MES. And I eat my own dog food in front of them. It is a little boring. And I tell my group, I'm not always fully engaged every day because, watching two micro Dow contracts go up or down for $20 or $30 in profit is not that interesting to a truly professional trader. And I get a lot of, comments on the internet about how I'm a scam if there's no way I'm a professional trader if that's what I'm doing. But that's one world. But my other real world, Eddie, what I do professionally as a futures trader is I switched into treasuries about 15 years ago, and I never looked back. I don't trade the stock indices with
Wow.
my big money. It's random, it's scattered, it's not necessary when you have this beautiful thing called the treasury market and the ZN contract, the 10-year, that trades 1.5 million contracts a day and has super liquid option markets. So what I mostly do is trade options on futures in the treasury markets. That's my
Wow.
professional
That's
day job. But I have a whole arm where I really am helping and educating people to learn how to take advantage of prop programs. Totally different world.
okay. Which you want to talk about?
I think I probably want to talk about the part that's more approachable, which is the prop stuff and that
Okay,
education.
let's do that.
Yeah.
Okay. So, your
Before
boring
we get into
stuff,
that, Eddie,
as
I
you
just want everybody
sure, sure.
out there who might not be familiar with actual margins because they're living in this prop world, that the initial and maintenance margin for a NASDAQ contract, the full NQ, at a real broker that doesn't provide day trader margins is about $33,000 right now. Why would you want to trade that when you could trade the ZN where it's only a $2,000 margin? So in other words, you can control
The ZN is the mini?
the ZN's the mini, yes, but it's only a $2,000 margin because it doesn't act like
Okay.
a crackhead, right? So the
And is there a
brokers,
micro for
what?
the NASDAQ? Is there a
There is
micro?
a micro for the Nasdaq, the MNQ, correct, but
And what kind of margin do you need for that?
it's about a tenth. It's about a tenth, so about
$200 margin
three
for
thousand
that.
dollar margin for a micro, and
Oh, for a micro.
for a
Okay.
micro Nasdaq, and then you can control the ZN, which is the full mini ZN contract for 2/3 of that. A product that acts a
Oh,
lot better,
wow.
that respects price, that is tied to rates which run the world, all that kind of stuff. Anyway, I do want to talk more about the prop stuff, but I just wanted to throw that out there.
Okay.
Because the question
Okay.
I get
So you're
asked is
you so you
why trade
so you
treasuries at
teach
all?
people you teach people how to trade, E-minis, E-micros, NASDAQ and Dow, I heard you say.
No, mostly the ES, so ES and Dow. Mhm.
Okay,
Yeah.
the S&P and the Dow. Okay. So what is your favorite strategy for trading these?
So I focus and teach predominantly mean reversion strategies. There's of course a lot of ways to make and lose money, but what mean reversion I find does for most people is it gives them levels that are easier for them to manage risk, and that's my whole focus. Is that what you hear all the time is consistently profitable. How much time does it take to get to consistently profitable? Or I'm a consistently profitable trader. I'm not that consistently profitable. I just don't lose that much when I lose. And I might hit single, 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 then I hit a couple grand slams, right? That's true professional trading. You know that. But when you're first
Right.
um, starting out, you have to kind of learn how not to lose first while everyone's hyper focused on making money. So mean reversion tends uh, to make people, I think, more comfortable with their entry decisions. So at a very high level, all we do, Eddie, is we look at standard VWAP bands, which are available anywhere. VWAP, I've been trading it for 20 years, even back when we had to plot it manually and use special software. Now it's all the rage. A lot of people talk about VWAP, but they don't talk about it within the context of the actual range that's going on. But at a very simple level, we just assign some VWAP bands. We look at the overall range, and we're trying to essentially sell extended highs or go short, buy extended lows to go long, and then take profits when it comes back to the mean.
Okay. Tell us if somebody has never heard of VWAP, what is VWAP?
So it stands for the
It's an
volume weighted.
obviously it's an indicator.
It's an indicator.
Yeah, it's an indicator.
It's the volume weighted average price, right? And you might hear a lot that indicators are all lagging, or you don't need any of these things, or this concept of trading naked and pure price action. I'm not exactly sure what that all means, or why it's some sort of badge of honor to not have an indicator or two on your chart. But we have some indicators on our chart, and they simply provide us information about what is the volume weighted average price. Because here's a cool stat, Eddie. We went and back tested for over 20 years in the ES. When the overnight range in the ES, the overnight, I'm always speaking in terms of US, New York session kind of things, right? So the overnight range in the US bleeds into, of course, Europe and Asia, right? But we're just speaking about the overnight range in the US market hours. So while you and I are asleep, hopefully, if that range is 50% or greater of the expected 23-hour range, in other words, if the range in the S&P is 100 points per day over the last trailing five days, and we come in at 9:30 and we're ready to trade 9:30 Eastern, and the ES has traded 50 points already, up and down overnight, at least 50 points of range, the probability that price will stay within 2 standard deviations for that entire session is over 80%. So I don't know what else you need to know. You basically have a roadmap into the future that if you're looking at volatility and volume, you now have high confidence that price will stay inside those bands. So why not operate when we get to the extreme levels of those bands? Now, here's the next thing.
So wait,
Yeah.
a question.
Yeah.
So you're saying that the overnight session gives you a peek into the next day's session?
Correct. How much range has taken place in Asia and London, or as sometimes Jim Cramer talks about it, the pajama traders, who are they're operating when the stock market's not open. So there's a lot of guessing and nonsense and things, right? They're not actually basing this off of equities that are actually moving. So when the pajama traders are doing their thing, if they've managed to move the market at least 50% of the expected range for that next day, based on the historical ranges for the last 5 days, we use a 7-day ATR. So we take a 7-day ATR, we just back out the weekends. That's basically what we're doing if we use a 7-day ATR, right? You just kind of remove the weekend. And if you have 100% range, why would you have 100% range? Well, maybe at 5:30 my time, 8:30 Eastern Standard Time, you have a big economic release, a CPI or PPI or something like that, or CPE. You get a huge move. Now you've had 100% of the expected range. Now there's a 94% chance that price will stay within those bands for the whole session. So if you get up to the higher end of the range, go short. If you get down to the lower end of the range, go long.
Wow.
It ain't going outside of 2 standard deviations.
It feels counterintuitive to me a little. Now, if you build in some economic releases prior to the market's opening, that I can understand. But this is a totally new strategy. I never heard of this before.
Yeah.
And you have the data to support it and the wallet to support it.
We call it stay in your lane, by
But
the way, Eddie. It's called stay in your lane because we look at those bands
Okay.
as a lane, and we're just looking for price to stay in that lane. Yeah.
So I'm just from hearing it initially, it to me it feels a little counterintuitive. It's like the tail wagging the dog. It feels like. It feels like so these lower volume overnight traders, not necessarily the professional traders and the institutions, are kind of and it seem to predict what's going to happen the next day with a pretty good degree of accuracy.
Predicting
There's a
anything.
lane
They're
there.
simply just giving they're operating that whole session within those volatility bands as they begin to expand as they trade. Because what happens is when the 6 p.m. Eastern open happens, the bands are contracted to this. They look like they're untradeable, right? And then like a alligator or shark or whatever, they as the pajama traders start
Mm,
to trade 7 p.m. Eastern, 8 p.m. Eastern, 9 p.m. Eastern, 10 p.m. Eastern, Asia wakes up. Now Asia's trading, right? These bands start to expand, or maybe they don't. If no one's trading, then they stay like this. Nothing happens. Now we show up in the morning, no economic event or anything, and the range is only 20%. What do? We just grab another cup of coffee and do nothing. There's nothing we can do. So they're not really predicting anything. They're just
but they're kind of stating, I mean, based on this indicator,
yeah.
there's a pretty high probability that that day's range will be fairly narrow based on your that it's going to be a pretty quiet day,
Um,
right? Or no, am I misinterpreting
No, you're
that?
misinterpreting because what can happen is then
Okay.
the market opens and now the real traders are there. So now all of a sudden you can get a big burst in volatility. The
Right.
bands can start to open up, but until you have 50% of that range, you still don't do anything. So,
Okay.
but within generally a half an hour to an hour of the New York Open, you have experienced 50% of the range. I'm just referring
Mm,
to what you can do prior to the trading session. I would say half the time we don't do anything for the opening candle, not because it's a rule or anything like that. We just don't. The pajama traders didn't give us enough range for us to
uh,
work off of on the open. So hopefully that makes sense. They're not predicting anything. They're simply just now. But occasionally there will be a piece of overnight news, something like that. The deep seek freak out. If people already forgot about that, that news kind of came out over the weekend, and then on that Sunday open, the market was just tanking. And this is the pajama traders. The market's not open yet. It was just tanking because all of a sudden there was a concern. The narrative was, China has an
yeah,
AI model that
the
only
AI
costs $6
trade.
million and NVIDIA is going to go to zero and, all this nonsense. So
Right,
by the
right.
time we came in the next morning, we had a massive range that we could work off of. And now we can make decisions based on this huge range. Hopefully that's starting to make sense.
Right.
Yeah.
So you're looking at the 1-hour ATR. That's one of your main
One day,
indicators?
7
One
day,
day
the
ATR.
day.
Okay. Okay.
Yeah. We
Okay.
trade the trading time frame that we use is either 5 minutes or we use a modified Renko. So you might have seen these, Eddie, or some people are familiar. It's a Renko where you can influence the offset as to when a new bar forms. Unlike a standard Renko, which generally doesn't have a wick, and a new bar only forms when the amount of price moves the distance of the bar. So we use those candles, but you can just use a 5 minute candle. So we enter off of a 5 minute candle using the standard deviation bands. The volatility range that we're talking about has to do with a 7 day ATR, and what is the percentage of a 7 day ATR?
If somebody is totally new to trading, I mean, we're talking about some fairly sophisticated concepts right now. Somebody's totally new to trading. Does well, can you help them? Or you need somebody who has a little bit of some of understanding of how these markets function.
The only prerequisites that I require is I can't help someone that can't find out how to get their platform up or use a computer. And I know we might talk a little bit about
Right.
computers. So there are
Yeah,
people that are trying to get into trading that don't
yeah.
really know how to use computers and are frustrated when they're trying to learn a new piece of software. Provided you can follow all the steps that we provide. So the answer flat out is absolutely. We work with
Okay.
newbies, completely unexperienced folks, but we don't work with people that can't follow instructions and get their setup working. And then once they have their setup working, we can work with them to explain what they're actually seeing on the screen.
I understand.
Yeah,
Okay. I just the only reason I ask is because 'cause we're talking about, average true range.
yeah,
You said standard deviation. These are words that will scare some people away, so and
yeah.
I'm sure we're talking over some people's heads right now, so I just wanted to clarify that this is all stuff that, you teach exactly how to start from the beginning as long as you can get your platform up and running.
Correct. But it's important to point out that it's not, mystical nonsense too. So I've started to create some content out there where, Eddie, we discussed. I've only been doing this for 30 years, and then I watch some of these newfangled people who are talking about fair
Oh, I
value
know.
gaps and institutional flow, and they're looking at some behavior that happened in the past, and it's actually called ICT or inner circle, and it's just complete nonsense. It's one they don't yet realize it yet. In fact, when you post this, there will be comments whenever I mention that because they're like a cult. They should call themselves the internet circle trader cult or the internet cult trader or something like that. It's complete nonsense. What I talk about is just volatility and volume. It's just math and statistics. We're not assigning any discretionary value to anything that we're doing. And there's a lot of stuff out there that is complicated, unnecessarily complicated, and putting people on the wrong track when they're just learning how to trade.
Yeah, well, there are a lot of people looking for the Holy Grail, and if you can baffle people with
Yeah,
bullshit,
that's right.
excuse my language, but baffling people with bullshit is pretty common in this industry, as you know, since you've been a broker. You started at the same time as me.
Yeah,
Unfortunately, trading is an industry that is designed to take people's money because, people think they can get rich quick, and so that truth has never really gone away all these years that you and I have been involved. Um,
100%.
However, you make real money trading, and there are real people who can help you.
Mhm.
Um, but so you have to definitely be careful of, people who are online who make all these claims. I'm sure you've seen these videos with, the guys with the Lamborghinis and the girls and the parties, and it's all about lifestyle. It's not what it's about.
What's such a bummer is that the attention algorithms they reward that too. Like I've experimented a little bit. We're the elder statesman in the room here, but I've experimented a little bit where I do put how I made and then put a dollar number, and unfortunately that always performs better. It really it sucks.
Yeah.
But
Yeah, and fear,
yeah,
fear-based
yeah,
fear,
yeah,
girls, large number rewards. I know that the FTC is starting to crack down on some of this stuff through YouTube
yeah,
specifically
yeah,
about false claims. False claims is a big deal.
yeah,
So you mentioned earlier about helping people learn how to not only trade using your methodology, but also how to use these funding companies.
yeah,
What is your feeling on these funding companies? Because there are a lot of mixed reviews. These companies, there's so many of them now.
yeah.
Um, I have relationships with several of them, and I'm curious your take because there are companies out there that, have a very bad reputation. There are other companies where it just looks like these evaluation accounts are designed to take your money, not really to provide any benefit that they and then there's just other companies that are completely full of crap. So I'm curious what your take is.
So, I maintain that they are the single greatest opportunity to ever happen in the world of active trading and learning.
Wow.
Now, let me caveat that a little bit, okay? So, yes, there's a massive proliferation, and there's a lot of them. And anytime you have um, uh, that much hyper growth and people throwing their hats into the ring, now why is that happening? Obviously, because they're highly profitable businesses for the casino, for the prop side of the house. So, you have to consider that when that's why so many of these firms are popping up. Now, the integrity and the ability of these firms to do what they say they do, which is basically if you follow our rules and trade the way we ask you to, this is the reward you get. There are going to be some that just flat out do not abide by that, and essentially that's the only time I think it's fair to use the word
Mm.
scam, which has become some sort of overused and abused word. in the prop space, because the vast majority of the participants, including the ones that have been around for a while, like a Top Step trader, they're not scams by any means. Now we have to get into the business model, right? Here is what's happening. They provide you a simulated account and then a completely fictional amount of buying power in the hopes that you don't educate yourself and you blow up your accounts and lose. Okay? That is their business model. Okay? Now, here's
All of them?
what? All of them.
All of them
They
in your
all provide
Okay.
too much leverage. So here's the thing, Eddie. They all give you a notional value. They say, here, trade with $50,000. And I think there's still probably half of their customer base that doesn't even know the difference between the notional value and the drawdown, meaning that if I were to tell you, Eddie, hey, trade with my $50,000, and you are, oh, cool, that's a good deal. What do I have to do? Oh, you have to give me $200 and I'll give you $50,000. And you're like, hell yeah, let's do it. And you sent me 200, and then I sent you $2,000 on a simulator, a $2,000 balance. You'd be like, what is that? You told me you were giving me $50,000. Well, they don't even do that. They don't even show $2,000. They show the 50,000. But of course, you can only draw down 2,000. So in terms of getting people confused, I don't want to get people too confused if they don't understand how this all works.
I think that's very clear.
But that's
Basically,
the
risk
most
is not
important thing.
50,000.
Yeah,
No, it's
you're
two-
trading.
it's
You're
1,000.
trading your drawdown. You're trading a very small account. So they give you $2,500 in buying power, and then they tell you. Remember, we spoke earlier about margins, which a lot of these traders don't even understand because they've never been in live accounts. They say you can trade 5 minis in your $2,500 account. That is insane, right? I mean, that you can't trade 5 minis at a real brokerage firm. I understand for all these haters out there, you can do it at AMP, right? Day trader margins are just as toxic as the way these prop programs are set up. All that being said, here's the analogy I use. Prop programs are a combination of a casino game and a carnival game. It's a casino. Imagine if you walked into a casino, Eddie, and instead of seeing blackjack or whatever, you saw this game where you had to bounce a softball into a can, right? And if you bounce the softball into the can, you're going to get this gigantic prize, right? Well, everybody that walks
remember
into
that
the casino, they don't have the skill to bounce the ball into the can, right? But the carny, the guy that works that game, he could do it every single time, right? Because he has the skill. So
He's done it 10,000 hours.
He's done it 10,000 times. And here's what makes that carnival game different than the casino, because in the casino, if you're a sharp player at blackjack or at sports or whatever, they will politely ask you to leave. You can no longer play the casino game because that's how casinos work. But the markets don't work like that. You can be the carny and actually get good at that game and then let all the other suckers that come up that pay their dollar and their dollar and their dollar pay you your salary and your time, and then you can walk right up, bounce the ball into the can, get the big pink elephant or whatever, and you're on your way. So there was a lot going on there, but the reason I say they're the best opportunities ever is because you have the opportunity now to pay a small amount of money, get live futures data, get an account that has $2,000 or $2,500 in it, and if you apply yourself properly, don't use the max size. Don't do anything that in terms of sizing yourself up, and instead learn how to do this properly. You can be that carny, and you can get paid on a simulator. You know, Eddie, and you and I started I couldn't even imagine this. Plus, we don't even have to get into copiers and all these ways where you can stitch stuff together once you're ready. And I have never seen an opportunity for someone to go from almost no knowledge of the markets to a very small investment to following someone like myself, obviously a little pitch for what I do, to actual success in the markets in a tighter period. I've never seen it before, and that's because of these prop programs.
Okay. Interesting. I have like 20 different directions in my head.
I gave you a lot to go on there, yeah.
Yeah. So it does seem that there's a lot of let me go in a different direction.
Yeah.
So the vast majority of people show up, and I know this for a fact. I had a friend who was working at a funding company, went out of business. He told me over 90% of the evaluation accounts blow up first round.
Yep.
And then there's The second round, if they make it to the second round, technically you can get paid, but it's still simulated trading, so it's gamification of the markets.
Yep.
And 90% of those people, they feel like they got funded. They got really funded, but they're not really trading the real market. 90% of those people blow up. So there's only like a very, very, if you do the math on that, it's what is it, 2% of people actually start making any money?
The data is in that ballpark, and I'm in a unique situation in the sense that I'm an investor in a few of these firms and have some access to what the data is. And I want to be very clear. I mean, I've done lots of interviews with these firms on my YouTube channel, and again, I support the industry. I support the firms that I have backed in terms of them honoring what they say they'll do if you perform. But yeah, the data is not very promising. Uh, but a lot of that is self-imposed because
Right.
it does attract. Again, the analogy is good. It attracts a gambling mentality. They provide way more leverage than they should. Some of these owners feel like they have no choice anymore because of the way these businesses were started back in the 2013, 2014, 2015, and then you have the emergence of so many of these firms during the pandemic, and now a whole new wave that have come up in 2025. They feel like their business models all have to reflect the same thing because that's what this market is used to. They're used to paying a very small
Right.
amount of money for the opportunity to gamble it up and see uh, if they have what it takes to just get a return on their very small investment. But within that, there is a cohort, and it's a growing, mighty, but small cohort that is doing this properly, and their return on investment relative to what most people's experience are in the markets, which is deposit $5,000, lose it, deposit $2,500, lose it, try to trade your own IRA for a year, your $100,000 IRA that you work for, and draw that down 50%
Right. Of
because you're
course.
trying to day trade stocks. Now, which is worse? That's real money or people getting
Right. No,
into,
there's no question.
a little bit
So
of a
you like,
toxic
yeah, yeah,
circle on that?
trading university cost has come down tremendously
Yes,
if you're really willing to put the work in to really, really learn.
correct.
And that's what you're doing. You're teaching people how to trade for the least amount of investment, it sounds like, because you feel like this funding revolution that's happening is an opportunity to really learn, and it sounds like it must feel a lot more like real trading because you have skin in the game versus, say, paper trading.
It feels a lot different, and you really have skin in the game once you've finally taken a payout because now you realize, oh, I have a
Uh,
buffer of actual money that I can turn from sim into something that hits my bank account. Wow, why don't I intellectually start to think of that as what it is, which is a real opportunity to cash flow. So if I
mhm.
act like a bozo, then I'm going to suffer the repercussions. Uh, One of the things these prop programs could probably do is put in a lot more safeguards, but they're making a ton of money and they have enough customers that are willing to do this in the way the current model is set up.
Now, is the current model set up where people who actually do start to figure it out, they're actually trading real money as
Correct.
opposed to
It
getting payouts on simulated trades?
Yeah, so there's been some really big success stories in 2025. And these are documented and they're 100% real. So there are most of the firms that have been around for a little while now all have an actual real path to live markets in which they will consolidate the funds that have been made on sim or use some sort of calculation to determine how much money is then put into a live account for that trader. And there are some success stories of people generating hundreds of thousands of dollars in live markets that started just as sim trade funders,
Oh,
so it's rare, Eddie, and it's not much different than anything else in business or life, right? The superstars and these high performers
Right.
are a very small percentage of the overall pool. But every single firm that I work with that I ever recommend has to demonstrate to me that they have that in place. Not might have it in place or will have it in
You
place,
mean
but
that they actually fund that past 3 standard deviation, the people who really make it, the outliers,
correct.
apparently,
I
who
need to
really figure
see,
it out.
and again, I'm an investor in 2 of these, but I need to
Okay.
see what is your clearing firm, how capitalized are you, and how much capital can you put into these accounts on behalf of the traders once they've reached that level. Um, there also are the flip side, which is there are firms where some traders have figured out how to do this, somewhat not always ethically, but they dance around the rules or what have you. And the prop firms, rather than taking them live, they can see that type of behavior that's not going to work well in live markets, and they pay them out and say, you know, you can no longer trade here. And that gets a bad reputation because the people then get behind that. Well, they screwed them and they didn't. No, 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 no. Those traders knew that the types of behaviors they were engaging in had nothing to do with being able to build a real relationship with that
Right.
firm. But everyone came out okay, right? You got paid some real money. You probably didn't spend more money on evaluations or activation fees than you got paid out. And you know, you can move on now and decide whether you want to operate with whatever cash you generated from that firm.
Okay. So, have you read the book Reminiscence of a Stock Operator? The story
Of
of Jesse
course, it
Livermore?
is the required. Yes, you find out
Yes.
about bucket shops.
Right, bucket shops. So, simulated accounts through trader funding potentially, and I'm throwing this out there, I'm making a statement, I don't know if it's based in truth or not,
Hmm.
but trading a simulated account that you can get paid on is different than trading real world money in a live market. The way Jesse Livermore was trading in these bucket shops where they were getting the prices of stocks off of the ticker tape, chalking them on a chalkboard,
Right.
where where if you actually were going to put a trade in on that stock, we're talking the late 1800s, to send an order to get it wired down to the New York Stock Exchange back then, you wouldn't get filled for 5 to 30 minutes in a slow market.
Hmm.
A totally different game, the way he was playing it based on. So he was trading a simulated game in a bucket shop, essentially. So um,
But you don't
I
even have to
guess
go
my
that
question.
far back, Eddie. You can just go back to the you know the SIBO and the floors in Chicago, which are dying out and might be gone eventually. And none of those guys, or most of them, couldn't survive once we went electronic because that was also a
Oh
very
yeah.
those
Oh
are real
no.
markets.
I mean,
But all they're doing is front running big orders. I'm a great trader. I'm just
I
going to
saw.
front run a big
I
order.
before I was a stockbroker, I worked on the New York Mercantile
Right. Yeah.
Exchange. My dad was a floor trader, and so starting at 17, and guy would come into the pit with a giant order, and he'd tip off his buddy.
Right. Right.
And then the buddy would buy a couple of contracts in crude, and then he might have had 100 contracts to buy. He'd run it up a few pennies at the time. I mean, crude was in like the teens back then, and then he'd front run. They were constantly doing constant front running.
Yeah,
So yes,
you
I
know that
mean,
term, don't hate the player, hate the game. Prop trading is the opposite. Don't hate the game, hate you, the
right,
player. You're just not playing like everything in life
mm,
shifts and changes. This is a
okay,
tremendous opportunity right now if you're the right player. So everybody
okay.
that's out there commenting on my videos or commenting about these programs or whatever, hate you. You're the player that's not playing these things properly. Don't hate this game. This game is phenomenal if you know how to play it.
So the game is, this is how you really learn how to trade and get those psychological juices of what it's like to be an active trader, to learn strategies like your strategy or any strategy, to really learn it and be fully involved because you have skin in the game, but you're not risking, your life savings doing it.
Correct. Yep. And the math is simple. You could have your own $2,500, Eddie, that you put into a brokerage account, a Ninja brokerage or TradeStation or AMP or what have you. Your own $2,500. You couldn't trade minis with that because you don't have the margin to do so. And you just start trading around with micros. But If you're the type of person that's willing to lose half or a lot of that in one day or 1 week and blow up your entire account, that's pretty reckless. But most people wouldn't do that. They would be death by 1,000 paper cuts as they're learning with
Right.
their own 20.
Right.
Or you could do the same thing with a prop program, but instead of 2,500, you just paid $100, but just treat it like it's actually 2,500 of your own dollars. And don't worry about passing in one day or how quickly you can get to a payout. Risk 10% of your account any given session. That's it. Don't even worry about risk per trade. Your only job as a trader in these programs is to demonstrate that you can manage to go days, then weeks, then months with never losing more than 10% of your starting account balance. If you can do that, you are playing the game properly, and you're doing so in a way that puts you on the path towards learning how speculation works.
Wow. And so, you are an investor in a few of these companies. What companies are they?
So that I can't disclose. And in
Okay.
both instances, it's not directly in the prop lending arm, it's in the tech arm behind the prop. So there's a conflict of
Okay.
interest if I was actually an investor in the prop themselves, but I'm an investor in some of the tech that powers some of these prop programs, or many of them,
Okay.
almost all of
But
them.
in your program, you do tell people, what firms they should use, unrelated or related. If there's conflict of interest, you might not even be recommending the ones you're invested in, or you're disclosing that somehow.
I disclose that, but again, there is a clear Chinese wall here. It's really the tech
Okay.
behind. It's the risk management tech behind the firms, not
Ah,
the front end that takes in the money and that
okay.
runs the Carnival game. So so there's not a conflict of interest there. I've been a regulated
Got it.
guy for 4 times in my life. I will never be regulated again, but it doesn't mean that I don't
Yes.
abide by ethical standards and the laws. But in terms of the firms that we recommend, we have a group of about 10 to 15. I know it's gotten a lot bigger. And I actually
It's unbelievable.
let the community now, my community of 1,000 plus growing traders, I allow them to really interact, because we get those questions all the time. Someone comes in, which one should I start with? I'm like, hey, just ask the community. They'll tell you their latest
Mm.
experience, both in terms of cost, price, payout rules, customer support, all the things that might be important to a customer when they're selecting a vendor.
And how can people find your community?
So you can just go to tradersdevgroup.com. That's the word traders and then DEV and then group, because what we're doing is we are developing traders as a group. Traders Dev Group. We're a group of traders that are learning how to develop ourselves personally, professionally, in every other manner. Tradersdevgroup.com. And the only thing that I offer is a trade room, and you get a free 2-week trial. You can find out it's for you. So I don't sell any courses or bots or indicators or hopes and dreams or anything like that.
Hmm.
I've been told for the last 10 years, hey, if you could just bottle this up into a mini course, you could sell it for $99 or $247 and have so much value. That
Right.
probably is true, but I don't offer any of that. The only way to learn how to do this is you have to develop a skill. The only way you can develop a skill is by practice. The only way you can practice properly is having an actual mentor, somebody. You can go out there and swing the golf club all you want, and eventually you might figure out how to improve your golf swing. But if you just take a few lessons with someone who can watch you and give you some tips, that moves from practice to deliberate practice. So that's what I offer this trade room. And then everything else, including some of our indicators, other training, all the stuff necessary to succeed is all included if you decide to become a member of our trade group.
Wow. I love that approach. Totally different from what other folks are doing. Um, I see on your website it says, "We don't teach you how to trade. We teach you how to become a trader."
Right.
So what's the distinction?
Trading is mechanical and execution. Being a trader is just being a risk manager. I would say we don't teach you how to trade, we teach you how to manage risk, but that's not sexy, right? Being a
Yeah, no.
trader,
Yeah.
being a trader is just being a risk manager. That's it.
Yeah, people don't wanna think of
Trade
it
is
that way when you
execution and
first hear about it.
mechanics. Um, the stay in your lane strategy that we talked about, people get frustrated when I say this sometimes, and I get a lot of pushback. But finally, the bulb goes off for most of the people in my community, and they're like, "Oh, I really could have learned how to do this in 5 minutes. This is actually a strategy that I could teach to a 5-year-old, which is basically once the criteria is met, as we discussed, Eddie, just put the orders on the lines. There's a line there. Just put the order on the line. So
Trading is, trading, real trading, at least from my experience, when
yeah.
I finally figured out my methodology for trading stocks, I'm a breakout trader,
Mm-hmm.
and I'm only looking for 4 chart patterns.
Mm-hmm.
Most of the time, I'm waiting. I'm
Yeah.
waiting for my chart patterns to set up. And it can be very boring at times. And if you're a person who was raised with an attitude, hard work pays off. You got to go out there and grind it out and
Mm-hmm.
make your way. If you have that, trading can be very difficult for you and will lead to over trading. Even though my dad was a trader, I still started working when I was 12 years old. I always had money in my pocket, and so my tendency used to be to always over trade.
Right.
So this is why me the trader needed another business, which is why I sell computers to people who trade, because I needed something that I could build on, that with that had I could see a path to a certain number where trading, there's a lot of waiting, and you can have good periods and bad periods, and will build on itself once you learn the real skill, but when it happens can be a little less predictable.
Yeah, 100%. But yeah, that's the differentiation that I make, is that you will not trade for very long until you learn how to be a trader, which is simply just means keeping chips on the table. You have to manage. Manage risk.
What do you think the biggest mistakes that newer traders make? What would you say are like the top 3 or 4 mistakes you see traders make over and over again? New people new to trading, the idea of trading.
They think about the upside first, or they drill too far down into minutia that's not really important. So the most common
Mm,
question I get is usually, how much money do I need to do X? Can I do X with
right.
this amount of money? Or how long until I can make this amount of money per day? Um, Never. I
Yeah,
reframe the
that the
conversation.
latter one.
Yeah, I reframe the conversation all the time as to, how many days can we go in a row keeping your stats, Mr. Beginner or Mrs. Beginner, with how many days you go in a row not losing more than X amount of money. So they don't think risk first. They think in terms of the opportunity and the upside, which is natural. We already discussed that, a lot of those inputs come from what they're bombarded with from social media. The next thing is
Right.
they underestimate. You might have heard people overestimate what they can accomplish in a short period of time, and they underestimate what they can accomplish over a long period of time. Could not be more true in trading. And we were talking about the prop programs. They don't do anyone any favors when they talk about 1 day to pass. We didn't even talk about that, Eddie. You can pass your
Mm,
evaluation in 1 day. I mean, let's be honest. If you can do that, those prop firms aren't looking at you in terms of skill, or they can't determine anything from 1 day's worth of trading. It's just a gambling casino carnival game mentality. Again, I still like prop programs, but I'm just saying that that's part of it.
okay.
So they underestimate the fact that this is skill, and they have to stick with it, and they have to put in the time. And the third thing I think is that people are drawn to this for the wrong reasons, as we discussed, but also they need to do this internal searching as to determine whether, I'm not really into the mental game of trading all that much. I think for the most part, this is a skill development thing initially. Once you become an elite performer, sure, you can hire a coach, you can spend money on mindset or whatever. But you just determine, you sit there and wait for your 4 visual price patterns to set up. I mean, ultimately, you don't need a shrink to tell you how to do that, right? You just have to
Well,
eventually.
if the shrink comes in when you get outside of your strategy,
Right. Yeah. Right. Exactly.
because your need to make money or to look good or to
Right.
feel loved or whatever it
Right.
is, whatever head trash you're,
But
because
people don't
trading,
even
you
get to
take a
the point
couple
where they
losses and
they
all
have
your
enough
head trash
reps.
comes right to the top.
They don't have enough reps to
Right.
even know
Reps.
that strategy is something they're supposed to be trading. So they drastically underestimate the skill development and the amount of time that it's going to take.
Right. There's no question about it.
Yeah.
No question about it. And it can feel really overwhelming in the beginning for a lot of folks. Um, but it definitely can be done, even when you try to keep it simple, for
Yeah.
sure.
Well, the final thing I didn't finish my thought on it was just around
Yeah.
doing a really internal, and when we have some questionnaires and some things we use in our group, because trading is not for everyone. There are definitely personality types that should not pursue this thing because you are constantly making decisions with incomplete information, right? And that's not how the human brain works. We like to see most of the landscape before we make a decision or weigh these various things. You're going to constantly be asked to make a series of decisions without incomplete information. With incomplete information, that's not for everybody. Trading is also not the misconception or mistakes people make is they get into it without really having a passion about markets and interacting how they work. If you don't
Yeah.
give a shit about that, don't trade. You should be naturally pulled into this and really care about what's happening with businesses and what's happening in the economy. If you don't care about any of that, now it's not important in your trading, but you should have naturally looked at CNBC or Bloomberg or read the Wall Street Journal. If you're not drawn into this, don't get into trading because that's the world you're in.
Right. Right. Um, that's it's a lot of wrong reasons that people get into
Mm-hmm.
it.
Mm-hmm.
And I think that's why Wall Street takes a lot of people's money because they get into it for totally the wrong reasons.
Yep.
So, do you have like a favorite client story? Like one of
Um,
your clients who, what's your favorite client story? Do you have one?
I think I could share just a general avatar of something that's happened that I mentioned before, never happened prior to 2019, 2020, when both these things converged. Prop programs came into existence in a huge way, and micro stock indexes. I should make that very clear. There had been micro products for currencies and for other things, but they were very illiquid and they didn't really trade that much. It was when the CME introduced micro stock index futures that things really changed. So we're going on about 5 or 6 years for that. And prior to that, I had some customer success stories and some people were able to succeed, but generally they were very highly capitalized because, as we discussed, they didn't have access to either of these two things. Um, yes, there have been actually some women come to mind. 90% of my audience is male, probably 95% in YouTube and things like that. But I have found that there's two types of people that do very well, at least with my teaching, which is just like snap out of it. Please just do what I say. Don't frustrate yourself. Please just come in and watch the materials and watch me trade and don't overthink it, right? And you know who does that?
Mm.
Guys in the military who
Who?
can follow instructions and women, right?
Mm,
So those are the two types
really?
of people. Engineers do really badly. Lots of other types of people do really badly. So the
I was
success
about to tell you, and the engineer personality really struggles to make a trade because they always need more information.
doctors, lawyers, people with higher degrees, philosophers tend to do pretty well because they go, this is just all ethereal, right? And I'm just dealing. Anyhow, I'll just quick stories.
Just
I got
that's a
I
whole
got some
other
emails
podcast.
from a few women that had never traded before, ever. They've never traded a stock or anything. Found somehow their way to what prop was, and then tried it and didn't have success, then found their way to my material. They already liked the idea of spending just a little bit of money, the prop story. Hey, I can spend a little bit of money to get access to money, to learn how to trade. And then they find me. And anyway, long story short, these were some women that had invested, I think, less than $100 in a few of their prop accounts, and then eventually invested a little bit more than me to join my community. But let's say their total investment all in is $2,000, and I saw a payout from both of these women that was over $60,000,
Oh,
real money,
wow.
you know. And the other thing is that that's not them trading erratically or putting on all the size. That is them simply scaling up appropriately, trading micros only across multiple accounts with copiers. I don't want to get too crazy about how that all works, but we're talking about people that turned $100 into $60,000. But more important than the dollar amount is the skill that they developed that they can't that cannot be taken away from them, because the skill they developed was not learning how to make money. but learning how to make money on a risk-adjusted basis, which is a skill that can never be taken away from you. So,
Wow. That's a fantastic story.
yeah.
Awesome. Well, Rod, I really appreciate you coming out. What's your YouTube channel for
So
anybody
my
want to check out on you?
my new YouTube channel is you can type in my name, Roderick Casilli, um, and I'm sure in your show notes and
In the
stuff you'll
description, I'll
have this,
put
but
that up. Yep,
Roderick Casilli
absolutely.
or Futures Fanatic, the Futures Fanatic. So that's the whole YouTube channel.
Okay. Any other socials people can find you?
So, kicking and screaming and reluctantly, I had a marketing agency that snipped up some of my live streams and things and put it in vertical format and did get me on Instagram. So you can find tradersdevgroup.com on Instagram. You can find tradersdevgroup.com now on TikTok. Uh, probably
And
coming to
I understand the comment completely.
yeah, yeah. It ended up
But
working
we
out
don't have
because
to
I was like,
elaborate
I hate
about it.
content. I don't want to film this. None of this stuff. They said, well, we're just going to take your live streams where you're already blabbing this nonsense as it is, making fun of ICT, and then they just tell me a few other inflammatory things to say that will get the algorithm going. And yeah, so you can find me over there. But really, the magic happens, as they say in Inside the Trade Room. That's Monday through Friday from 9:15 Eastern till 11 every single day. It's a one-to-many mentoring opportunity. We have an amazing community. To this day, I have never had to remove anyone from the community or even from a
Awesome.
trial. I mean, this is insane. It used to be, Eddie, you would just have so much, people spamming your chat and coming in with all kinds of
Oh,
negative thoughts. We have created a really supportive,
there's a lot
amazing
of
group.
trolls out there.
Yeah, a lot of trolls. They God bless them, they don't find their way to our group, so
Yeah.
that's how you can find out more about what we're doing.
They make their way to YouTube, but,
Oh, no, yeah, yeah, YouTube, I get it. It's like, my favorite YouTube story is that YouTube has comment moderation stuff that I can't even control, right? So people will put negative, nasty things, and I wanna actually respond to it because I can see it, but it doesn't get published, and since it's not published and then it gets banned, I can't even respond to it. I was like, "Hey, if you wanna come at me, just come at me with a few less F-bombs and then I can
right, we'll
respond."
have a real conversation.
That's right,
Yeah,
we can have a
exactly.
real conversation. Yeah.
Yeah, there's always, people, still living in grandma's basement who don't have jobs and their life sucks, so,
Yeah, and they
unfortunately,
they
there's
think that anybody, like you said earlier, it's not all of us, and of course, this is very self-serving for the two of us to say this, but we have been around for a long time, and it's not this sense that everybody that has a public presence doesn't actually know how to do this, or anyone who is offering anything for sale in the trading space. Those who can't do teach. It's just not true. You can filter through
not true.
everything in this world and find goodness. So don't start your whole approach to everything you're looking for with this toxic mindset around, oh, everyone out there is being disingenuous when it comes to trying to help people understand how to make money in markets.
Absolutely, and do your due diligence. I
Yeah,
mean, you're offering 2 weeks for free.
I
Might
breathe
as well
heavy
check
into
it
the
out.
mic. Lots of people don't like that. For the first half hour of the day, all I'm talking about is my sports bets that I made over the last couple days, and people are like, "Is this a sports trading room or
Well,
whatever?"
you do live in Vegas.
I
That's
do live
just
in
a whole
Vegas, so
other
if you don't like
conversation
anything you
here.
see, you don't never have to join.
Awesome. Rod, thanks for coming out today. I really enjoyed the conversation. I mean, I could keep going, but, we're already an hour in,
Yeah,
so
yeah, yeah.
I do appreciate you coming out today.
Thanks, Eddie. Really appreciate it.
Awesome.
Thanks for having me.